All right, hey everyone, welcome to the monthly market outlook. I am Frank Ochoa, and also known as PivotBoss, and I am the author of the book Secrets of a Pivot Boss. You can go to pivotboss.com here and click on About, and it'll scroll you down. You can learn a little bit more about me and my background and experience. I wrote a book, Secrets of a Pivot Boss, here. You can click on book and check that out and read a little bit more about that as well. This book basically lays the framework for how all professionals should approach looking at the market and analyzing the market and engaging the market. The approach that I like to use is based off of a universal approach, basically a universal approach to applying analysis or any tools and techniques to any instrument in any time frame, so that you can engage the market as the opportunities come your way and choose the best opportunity. So that's kind of the framework for what we do. Again, Secrets of a Pivot Boss is that book there. We also run the premium trading room here as well. And what we're going to be doing today is kind of what we do in our room basically every day, but we're going to be providing a monthly market outlook based off of price, volume, and value. We're going to be looking at these charts from higher time frames and drilling down into lower time frames in some cases. We'll talk about several futures contracts and various markets, and then we'll also look at various stocks and provide some potential buy and sell opportunities to look out for here heading into the month of August. Okay, so let's go ahead and take a look at some of these markets right now. The first one I wanted to start off with was crude oil. And crude oil's had an interesting couple of days here. For the most part, crude is traded very nicely within, kind of a trading range type of pattern, mostly sloping downward, as you'll see right here, right? Kind of a downward sloping channel type of thing. We knew to watch edges. We knew to watch for failed new lows and those types of things. And where we last left off in crude was July 5th, so the day after the 4th of July. July 5th, which was about right here. The idea was that if price pulls back to 43.76, that's the opportunity for bulls to defend and return back to 48.76 and 49. So that was the idea that we offered on July 5th for crude oil, and it worked out fantastically. Again, when price was sitting there for a few days, I was still watching very intently because, it seemed too easy, right? First, we were looking for price to get below this low and then reject. And if that were the case, then perhaps the next pullback could give us the mid and perhaps a little bit higher. And it played out right according to the playbook. Awesome. Glad to hear that you got on. Great job. So this one is the one we offered last monthly market outlook, again on July 5th. And it worked out perfectly, flawlessly, and continued higher. Obviously, in our trading room, we were very bullish once this day really started to squeeze here. We knew that this thing had a shot to really start going higher. But today was quite a day here where we've pulled back quite a bit in price, back below 49s. But you can see here the path has still been to the upside. The only part that, now that this is the part here that I always say is the hardest part. It's the part between trades. Because the idea to begin the month last month was watch this for this, right? And once you get that and you get the move, now it's about waiting for that next opportunity to get the next move, right? And sometimes it takes more development than just a quick V top or a V bottom. It takes several days, sometimes a couple of weeks to build out before the next one. And so being patient between those moves is something that is definitely a learned habit. But you eventually get it after a while, right? Being able to just wait and pick your opportunities as they come. In this case, we're right off the upper edge of this range. And so already it looks like a great selling opportunity. So with this day here, this is something we pointed out in the trading room early in the session, was that this was a 2-tick higher high failure. Yesterday's high was 50.41, today's high was 50.43, and from there, it was no question that this was going to be bearish for some time. We were actually looking for a little bit lower. I was looking at perhaps 47.90s as a target today. So it could have even gotten a little bit more out of hand. But this move has been bullish overall. We've been talking about 47.65 as the May FOMC key level, holding as potential support. The top end, you have these coming in. So the next pullback could still be a buying opportunity, but I will be honest, right now, doesn't offer the best odds just yet. I think after this initial rejection here, there may be a shakeout to come, and that shakeout or retest may be the opportunity to bring it back to 45.66. So there may be a little bit more development ahead. I think the first pullback here may be a bounce, and then up here there could be some sort of retest or rejection that could lead us back to value. So right now, again, the best path forward is always to wait for the edges. If this is value here, when price gets too far away from value, it comes back. If price gets too far away, it comes back. And so right now, we're trying to time when will price come back, or will it even come back, or will it continue to push higher? So we got to continue to watch for those cues. I think the easy trade was here up, and now we have to see what happens, because nothing says that it has to bounce off this upper line, right? It could continue higher into 52, perhaps up here into 53.5. So again, that's why I say you always have, after a great trade that works out flawlessly, you always have to just kind of pull back just a moment, reassess for the next one, and because right now, again, it could lead you to get into a trade too early. So I'm still watching this one right here, but the early idea is that we perhaps get a fade back to value. So not bad overall. I mean, this is, again, when I mentioned that when you're looking at crude oil, 40 and then 55. And then that's the range right there. And so lately we've kind of just stuck right around value in a very small portion of this range. And it's not until you kind of shake out toward one edge or another where you really get the great opportunities. So if this thing were to continue higher, this again up here would provide a much better selling opportunity to bring it back down. So that's just something to keep in mind looking longer term. If this were to go out to 54 or down to 41.40, any of those zones right there could be a fantastic fade opportunity back toward value. All right, let's talk about the NQ. Right now, Apple just hit. And with the NQ right now, where we last left off, again, July 5th was, I believe, that day right there. We came within 10 points of this key range low. We talked about the key range, and I mentioned that the trade of the month was going to be if price gets into this zone here. If it can get into 5,500 to 5,550, anywhere in there could be a fade back to 57.29, and then I mentioned back to 58.50. And so again, you can see how great that opportunity was. Again, it's just using our basic concepts, which are defending pullbacks in the primary trend direction. Since the market has been going up, every time it pulls back, it's a better buying opportunity, right? It's also looking for failed range expansion, those concepts, because failed range expansion leads to significant squeezes or long liquidations. And so we're looking for those types of concepts. And right here, we eventually got the squeeze that led to a fantastic move to the top. And then here recently, we got that major day last Thursday where we had one pullback day. I've been calling them one-day wonders. This is actually was a small one. You can look here. I mean, those days where in one day it wipes out 2 weeks or 3 weeks worth of gains, right? Those 1 days. This one wiped out quite a bit of days worth of gains and has set the range for the last week. But it's trying to do battle here around 59.07 to 59.30, right? This is a zone where after this rejection, bears are trying to keep it offered. They're trying to keep it offered right now, and it's still a battle. I mean, this thing has been trending up. The recent squeeze has been quite bullish. Bulls got paid, so on the pullback, bulls are coming in. So nothing is just because bears are coming in here and bears are trying to keep it here. This just tells us who's positioned where. It doesn't, right now they're not winning or losing. It's kind of right here they're just battling it out. So for right now, I mean, this is a very important zone because this is the top of the key range. It's at the opposite end, so the counter trend end of a trending market. So you have to be more careful to sell this than if you were buying this end, right? That's why when we were here, I was much more emphatic about the buy opportunity back up. But here you have to be a little bit more cautious about it. And 59.27 to 59.30 is that zone. And we're right there, right as we speak, after Apple. So this could all materialize with another squeeze ahead. So that's the only thing about this one right now, is that it's not advisable to really sell into tech, hardly at all. The best thing is to wait for tech to pull back and then buy it. And so you have to be careful here on the counter trend edges. And I've mentioned that quite a bit to our traders in the room. But this right here is, you got to watch 59.27 to 59.30. We're in that zone right now. If there's rejection there or price can't get above that zone, then perhaps we pull back a little bit more. That's the previous month's high, previous month's close. This is the bid point right there. That would be about the zone that you would target, right? 5,800. 5770, right? That zone. That would be a great little target zone if this area is rejected. But more than likely, with how strong this market has been, above 59.50 will squeeze this thing right through 6,000 and target the upper end of this target zone here. So we just have to see which way we play out here right now. Tech has been quite bullish, and now earnings, that it just, anything can happen sometimes, but overall, we'll see how it plays out. But this is the level to watch. So right now, not a clear-cut, actionable trading opportunity at the moment for the NQ, but at least we have that great key zone here to watch out for, because something could materialize. Now, I do always say here, because the market is trending up, even if this were to pull back like this, it would still be a great buying opportunity or a trap opportunity at these lower edges. So it's still a buying opportunity until proven otherwise. So even if it were to pull back, it would be short-term directional bearish, but longer-term directional bullish. So this one right here, coiling up at the edges, and we'll see how it continues to develop. So nothing clear and away actionable on this one right now. With GC was fantastic. This one right here, we had it pretty much nailed last month on July 5th. I believe it was that day right there. I mentioned that probably around 1200 is where we might see a rejection. That'll bring us back to 1259. And so that was pretty much money right there. I mean, that was 1204s or so was a low. And then, but for the most part, I didn't lie. We were calling it on this day. This was the day that really gave us the boost and the confidence to get long. So live, this was the day, because on this day here, price had broken below the previous session's low and bounced off of market structure. When before it had a clean market structure down, it had broken back above, and at that point it was defending that market structure, and it was a failed range expansion to the downside. That all implied that we could be looking at that squeeze to 1250 and 59, and we got it. So a lot of factors there that went into this, but obviously, plain away, this is the trading range. This is a great trading range right here, and your job is to sell premium up here and buy discounts down here, and then return it to this pink line. That's the basic job as a trader. That's just the basic job. It's not the only job, but it's one of the most basic. So that's why I always mention be patient and let price go break a new high or break a new low, because when it does and it takes out that new high, it's more likely to come back to value than it is to continue at times. You come down here, you break through this low, and then you come back to value, and now you're going back up. So not bad at all. The other thing I always mention here, and you can take this one to the bank every time. I mean, it's just something that you look for as a trader. It's so basic and so simple, but it's kind of the basis for a lot of what we do in the room. It's basic failed range expansion. So when you're in an uptrending market, I'm always asking my traders, okay, now this is a day here where if we get a failed range expansion below this low, that might be the slingshot that takes you up over the next 2 to 3 days. And that's how you got that move that day when we were talking about it. And then over here, after you get the day up, you hold for a day, digestion. And then that's when I mentioned to our traders, okay, now this is the low to watch. If there's failed range expansion there, that's the spot to get in for the next 2 to 3 day bump up, right? And so you can see it. This one didn't quite play out, and so it was on this day where it did it. And then today, pre-market report, that's what I was calling out, was that, hey, right here we got failed range expansion. That could be the next bump up. We did get a great rally, about 11 handles back into about 1280. But 1280 proved to be very, very firm resistance. Incredible how strong that resistance was today, intraday. And then you can see right here, this is the previous high price, previous close of last month. And so far, I mean, that's on both sides there defended. So this is an impulse range, probably a key range at these highs probably to watch as this thing is kind of going outward. So my idea with gold here is that we still continue higher until we get to about 1290 to 1300, right? That's what I've been calling, just like last time. So I think pullbacks are still to be defended for a continuation. That's my primary approach right now to engage in gold. And once it gets up here, you have to then look for the opposite. So that's what I mentioned before. Once we were able to get this one, I said, once we get up here, shift your focus now and look to fade it back to value. So the same is going to be said for when we reach, or should we reach, that area. Now, that doesn't mean every time, you fade it every time. At some point, we're going to stop being in this range, right? At some point, we will break out and expansion, price discovery will occur. But until then, you got to fade the edges. Bid with the bidders, offer with the offers, right at the edge, and that's where you engage. So right now, all signs point up until proven otherwise, until you get to that zone. So I think any pullbacks right now still to be defended. 1260 is a great level as well. So I think any pullback still an opportunity for bulls to defend until we get to that edge. So that's the idea on gold. Here's the ES. Now, I know for the traders in our trading room, you all hear this a lot, so sorry if some of you are in here and I'm repeating here, but there's something I always look for seasonality-wise going into August, and that's where is the August low. Because in August, there tends to be quite a pullback that can occur in the markets, and you can go back over time, over the last 15 or 17 years, just to go back and see how it kind of behaves. But The general idea is that in August there tends to be some sort of pullback, right? As summer's ending for whatever reason. And then after that pullback, depending upon the severity of the pullback, if it's a pretty good sized pullback, it can tend to hold the rest of the year as we head into the holidays and get the Santa Claus rally. If it's a shallow pullback, say it's only a moderate pullback, then the October pullback that occurs may then take that one out, and then the October low becomes the one to use to lean on heading into the end of the year. So basically the idea is in August here we may see some sort of pullback that can occur, and depending upon how good of a pullback we get, or should we see one at all, that could be a great pivot to use heading into the end of the year, because you may be able to position yourselves from a longer term perspective, right? Because we have 5 months left of the year starting with today, August through the end of December. So that could be a 3 to 5 month trade that you can put on there, position trade, something that I've done for quite a long time, especially on my higher time frame retirement accounts. So it's something that I'm constantly looking for. And so the fact that we're currently at kind of a cycle high right now would at least suggest that we could see some sort of early pullback in August. And if so, that could provide a great near-term buying opportunity. And depending upon how big of a pullback we get, if at all, again, it could be something to lean on heading into the end of the year. So if I scroll back, for example, the ideal one would be perhaps, let's see, well, right here. This was a huge one a couple of years ago. This is the August pullback. Look how severe that pullback was. By the end of the year, that's the end of the year right there. That was the low. It never came back. That's something, again, that tends to happen. The other look is right here. Let's see. Look at this one now. Last year's was atypical because we had an uncertain election heading into November. But this is what it looked like last year. Here's August. And so we only got a little bit of a pullback, right? And so again, here is, it takes it out later on in the year, heading into in October, but then really takes it out here in the election. So that was atypical, but if you go back and just look through time, it's all about quantifying the data, familiarizing yourself with these tendencies. Look at here, this is one where on August, again, we get a pullback. Wasn't that big of a pullback, so here in October it takes it out, and then it takes it to the end of the year, right? But again, just knowing the tendency allows you to anticipate this opportunity. And if it starts to play out in the way that you anticipate, that's something that you can then use to position yourself accordingly heading into the end of the year. Here's a pullback again in August. It was good enough to hold to the end of the year. It actually closed on the highest of the year there. So again, it's not perfect. It's not something that always happens. It's a seasonality tendency that I've noticed. I've even written about it before and published an article on Mr. Top Step a while back. So I just wanted to talk about it because today is the August 1st monthly market outlook. So something just to keep in mind as we head into the rest of August. And again, in keeping with that storyline, if price were to pull back, where are the great buying points? I think the best buying point is down here still at 2404.5. I mean, that's where the LVN is, prior support, key range high. And it's the other side. It's the other side of value. Because if you pull back to value here, again, you could get caught in the chop because that's going to be a sticky area. So we'll see what we get, if at all. Obviously, we may not get any pullback. This thing's been so buoyant. We'll see how it goes. So this is one where, again, we don't have an actionable trade opportunity right now, but we have a framework to work off of as we head into the rest of August. All right, here is one that we talked about last month. I think this was a request. It was GILD, Gilead Sciences, and again, July 5th, I believe, was this day right here. So what I mentioned was that this one was a fantastic candidate for a pullback and buy opportunity. And I mentioned 68 by level. So if price can pull back towards 68 there, and it got to about 68.60 or 68.55, then there could be a buy opportunity to 75. So the call was from 68 to 75. Now, of course, opportunities don't always play out like this, right? But this was one of those opportunities that had just broken a major trend. That's what made it so enticing. And this is what I explained last time. And again, I used the monthly pivots. So what I'm going to do is I'm going to show all of the monthly pivots, go backwards. And what I want you to focus on, again, this is what I mentioned last time, is the pink pivot range, or magenta pivot range. And in an aggressive downtrending market here, this pivot range will ideally form at lower and lower price levels. And what happened last time was this thing broke that trend by rallying through the pivot range and closing higher. By doing that, the upcoming month, which was July, had a higher value relationship. That's a change of bias. This is something that I talk about in my book, Secrets of a PivotBoss, using these higher value, lower value concepts. And this is one of those opportunities that just works time and time again. It's incredible. Even in the book, I go back to 1970s on some of the research, and these concepts worked then and they continue to work now. And what was so intriguing again about this was that this was a downtrending prospect here, and it broke and rallied. And I know a lot of traders get kind of paralyzed by FOMO, right? Fear of missing out. But instead, I always say it's best to let the thing do what it's going to do. Let price reject. Let a certain signature develop, and then know how to negotiate your entry at the right spot. And so you didn't have to know or be a rocket scientist to know that this thing had just broken that trend. And now, according to the book, right, according to higher value pivot-based techniques, if price pulls back to the pivot range, this is where you want to look to trigger an entry for a shot at seeing a further expansion. The other thing we talk about is pivot-based EMAs. So those pivot-based EMAs are stacked and sloped downward trending. And then the crossover occurs right here, boom. And now that's the trigger zone. So for the trigger zone to start coming up to provide support, this is what I teach our traders. That's the ideal entry location. And so that's all we were doing last month. So July 5th, we were talking about a pullback towards 68s would provide a buy opportunity to about 75. And we had a primary upside target for the month based off of those lows that put us right in this zone based off average monthly range. So very nice move right into that area. Again, just using basic techniques, but techniques that are very, very powerful. Great move right in step with that. Another one that we looked at was Tesla, which I just typed in the wrong box. There it is. Tesla was great. This one was one here, and we'll talk about this one and what we might see going forward. They have earnings coming up, so this is going to be interesting. But this one had sold off hard. Remember, we had the buy off of 290, and I said it could be a 100 handle move. It went from 290 to 286.99. So it went almost a full 100 handles. 97 handles. Very, very nice move. But once it got up here, it failed that new high, and then the pullback occurred to this trigger zone, gapped up, wiped it out, and then all of a sudden it started this way. So this is July 5th right here. So that's July 5th. And what I mentioned was this is likely an impulse move. It's an impulse sell-off where the market is finding the edges for the next trading range or for the next market moves. And so in this case, the market aggressively sold off, and I said as soon as it finds a low and it finds rejection, that's when we're likely going to see a fade back toward the center of that impulse move. And so I said the likely zone to watch is 310. So that's what we mentioned last month in the market outlook. If this thing can hit 310 around there, you might be able to see a bounce back toward the mid. That's about to where expect rejection. And so price dropped into 310, and I remember watching it, and it didn't reject. Then it sat there on day 2, and it's an inside day, and it didn't reject. It was just digestion. And then in our trading room, one of our traders said, hey, is this rejection in Tesla right here? And we start to see price push nicely higher after failing to hold below 2-day lows. So this is exactly what we mentioned, right? You see the high, you drop until you can't go lower anymore. Price had dropped below 2-day lows. It had everything it needed to keep going down if it wanted to, but it didn't. It was failed range expansion, and price pops back up. So on this day, by around 10:30 in the morning, this is when we were declaring it a likely buy candidate, back to 345. 345. The reason why 345 is because it's the midpoint between that high and that low, and that's what you need to hit in order to satisfy a key range under our rules, right? And it's uncanny how often that midpoint is hit. It's very, very seldom we do not hit that midpoint under the right circumstances, right? There are certain circumstances where it wouldn't, but when we say this is rejection and I think this is rejection, there's a high odds that we reach that midpoint. This one labored though, that's the problem. It sat there for a long while and it was kind of nerve-wracking, but it was still holding market structure and eventually got right into that 345. We had traders that were able to pick that up. Very, very nice move indeed. And then yesterday we observed that price was not able to hold above 340. It was failed range expansion, and at that point we said, okay, I think it's pretty much done. Obviously, you have earnings coming out, so we'll see how it plays out now. There's no clear and away opportunity at this time like there was last time, but there are some key levels that you need to know. 290 is still that very important key level. You also have 350 right here. Obviously, the 390, right? That kind of bisects the range, right? And lo and behold, look what we have here. We have a double distribution, right? That bisects a price distribution. You got there and there and there. So right now, I think it's, depending upon what happens, I haven't really paid attention here with what's coming up with earnings, but depending upon what happens, we'll see. But I think there's good odds that we could just sit here between 350 and 290. So if price were to come down to 290, it could pop right back up to 350. And then come to 350 and go right back down. And just trade for a little bit before it sees its next move. The market structure is set, so if this thing were to reestablish itself back above 350, then we're making a move up, right? So that's what I like about a range when it's compartmentalized the way it is like this, because you're able to see exactly where the most important key levels are. You know exactly what the market is doing, and from there you can plan a trade out and wait until it gets into your zone. So right now, short story is we got to see what happens with earnings, but if we see 290, that's an opportunity to watch for rejection and bring it back up as high as 350. If this thing starts to push through 350, then you're going to have 390 pretty quick. So we'll see how this continues to play out. So not in an actionable zone right now, but it's something that could play out here shortly. Well, I typed in the wrong box again. XLE. It's a little sneak peek box. So right here, XLE. This was a request last time around, and this one was interesting here because we knew that 64 was a long-term key level. Price had pushed down below it, and we pushed up, and this was July 5th right here when we did our last Outlook webinar. And what I mentioned was watch 64 because we're going to get a retest because we had been trending downward, right? So it's clear that if this is rejection, it's going to come retest. So I said if it comes down here and rejects that low at 64, then we're likely headed back to composite VPOC at 68.48. So that was the trade for XLE last month. This rejection here leads you back up, back to that target. Why this target? Because 64 has been major support for a long time. And right now it just rejected those prices. So if you're going to have rejection here, then price needs to either return to prior value or it needs to create new value, right? That's just basic auction market theory. So that's just what I'm basing that off of. And so far, so good. You see price came down, rejected one day below that previous low, bounced right back up, held above the previous month's close, and has continued to push higher. So far so good. This also had a lower value relationship in the pivot range, and now we have a higher value or overlapping higher value relationship. So again, a pullback could offer an opportunity here, but this thing is going rather slowly now, but it was a nice rejection here. And this is something that I always look for, again, something that you can use every single time. If you get a great rejection like this bar here, where price clearly goes down below the prior low, and then by the end of the day it's closed way back above, the midpoint retest right there offers fantastic trade location the next day, right? If price opens above that point, then any pullback into it or close to it could be a fantastic trade location with minimal adverse excursion, something that you can carry with yourself, that technique wherever you go in any instrument. It's just a fantastic entry technique. So those are a few of the opportunities we took a look at last time. We have a couple here we've been watching in the room and a couple I've looked at here today. WSM was one that we've been watching in the room and brought to us by one of our traders. This one, here, let me go ahead and take off. So you can see the larger trading range there. It's a multi-year range, couple of years, rather wide. The main range goes from 45 to 56. So again, most of the time markets want to find balance, want to trade around balance and just find a balanced market, right? And that's where it's doing this. That's where you get a great D-shaped profile. You can fade the edges back to value, that type of thing. And 45 was kind of that edge, and recently we got below it. One of our traders said, hey, I think this thing is due for a squeeze here. What do you think? We could be looking at a nice move back up. So we take a look, and absolutely right. This was ready for a squeeze. It was on this day right here. And I mentioned that these lower lows and this rejection below 45s is kind of a big deal here. And even though this squeeze really big here, we knew that there would be some sort of shakeout leg to come. So in a trading room this morning, we talked about the pullback coming back toward 45.50. That's right where it was right there. And I said if price comes back toward about 45.50, that's the zone that bulls need to hold. And you even have some leeway down into 45. So between 45 and 45.50 is the zone to defend, and you might be able to get this thing squeezing back toward the previous month's high pretty quickly. So again, this 45 has been a long-term zone of support, rejection area. Every time price gets down near that area, it's coming right back up. And this latest squeeze right here shows us that anybody that got short down here, right? Because think about the bears. I used to be this way. I used to see support, and I used to see price break through it, and I was just dreaming of this thing to go to zero. And then price pulls back, and then here's the pullback leg, right? And you're like, okay, I'm going to get in on this pullback leg, and then boom, rejection and squeeze. And then it does that. And then you feel like a fool that you didn't buy with everyone. So, you know, again, a lot of trading is learning from past mistakes and then being able to adapt, right? Learn from those mistakes, adapt to change. And instead, that's why I'm always looking to trap at the edges. And this is failed range expansion below 45s. This is a pullback. I'm not saying that this is an easy trade here to go, because everything has been sloping down. But as long as price can hold these 45 to 45.50s here, this has a great shot, at least in the short term, to get back to 49.50, which is prior highs and the previous month's high there. So 45 to about 49.50. The other thing here is that is a short-term opportunity. That might be, say, a 2-week trade, right? If you look out, say, 3 months from now, you might notice that it'll be up here, right? Back toward value at 53.78, up to as high as 56, because that's the upper end of the range. So the short term likely gets you here, and then you might have to endure some wiggle for it to do that. But again, there's some options plays there as well if you use farther out, down out of the calendar options there. You can be looking at something that forecasts much farther out. So back this way, and again, that's been a zone that if price gets up there, that's a great area to sell, because you see distribution time and time again. So right now, showing signs that it can show a quick bounce, followed by, we'll see what happens back up. So right now, pretty decent hold off of our 45.50 so far. Here's NVIDIA. NVIDIA here, this one had a great squeeze, and this one occurred the day after. So this one right here, that's the monthly market outlook, July 5th. This is the day where we called the long on NVIDIA in the room. And basically the idea was that we were waiting to see how price was going to respond outside the key range low. Remember, that's a bread and butter trade opportunity, something that can make you money all the time. It's not always perfect, but if you're always looking for that in the right environments, you're putting yourself at the right spots with the odds in your favor. We're trending up. You have a major impulse move that sets the edges. And an uptrend with a key range low, you want to look for a failed range expansion to the downside. So anytime price gets down here, that's the optimal zone to watch as a buyer to return it back up. First to the midpoint, then perhaps to the all the way to the top. Now I'll be honest, when I called this one, I mentioned this is the squeeze day. It's got to close back above 142, as I said though, by the end of the day. But the primary was 155.30, followed by 160 to 162. I said if it gets beyond that, it's probably overcooked, and you might start to see this thing wander back. And it went all the way to the top. It really did. So I should have had a little bit more conviction on the farthest target there. But again, very solid move, failed range expansion with a great push up. Now what we're looking at here, you can see how bullish the slope is. The PIMAs are stacked and sloped, holding the trigger zone at the moment. But again, the edges are solid. The edges have held. The one little push here failed, and it's pulling back. So this is looking very similar to the NQ right now. Very similar. It could go either way. It really could. So not an easy, actionable move on this one to watch out for, but I will say that if this were to pull back, that there are opportunities to trap again or watch for rejections and bring this thing back, because this thing has been very, very bullish. At some point, we will see expansion from this key range, and at that point, you know, we'll either be looking for 115.73 down here, or we'll be looking for the upside target, which is going to be 194.87. I seem to think that this thing has been quite bullish, and if we were to see something like this and to say 140, it could be a long-term 140 to 195 type of play. So just a few ideas here on NVIDIA. It's treated us very, very well. A lot of great moves here recently. It's moved to each of our targets. So whenever you have a stock or an instrument that's really flowing against your analysis and how you like to engage the market, then you want to kind of continue to watch that issue. So this one right here continues to move nicely. We'll see what the next move brings, but it could be quite nice. Here is Amazon. So right now, Amazon sitting right at 1,000. This one was one I was talking about earlier in the room, in that it's been extremely bullish. I mean, you don't get in front of Amazon right now. It's a juggernaut, unlike anything we've ever seen, and will continue to grow at that pace. It seems. But it does appear that right now, where we are in the chart, while normally this would look like a great buying opportunity, we're right back at an HVN. We also dropped back below the key range high. And when you're around the HVN, at the very least, after rejection up here, that would suggest maybe some sideways, like you get stuck in the area. But then failing to hold below this zone might lead to even a little bit more pullback. And so the best opportunity would be waiting to see if price can get down here toward about 910 to 920. 926 is the key range low here. You can see that we have kind of this profile built out here. So with this rejection up here back to value, if this doesn't find a bid here, we might see this thing drop back down here, and this would again be a great trap back to 1,000. So right here, that's 1,000. You know, nice round number. That's right where we are. If you were to drop down to this zone, it could be a 910 back to 1,000, a nice little sticky point. So that's kind of the opportunity here for Amazon. Again, not quite sure how much of a pullback, if at all, we're going to get, but we're at a spot here where I'd hold off on defending right away, because at the very least, this was a major significant high, and right now we may be looking for an impulse low, right? We haven't found rejection, so I'm not keen on buying Amazon right here, but if we get into the zone down below, it could be a fantastic buy. Here's Apple. So right now, Apple's trading 159.58. 159.58, so it's a big gap up. So basically trading about right there. So big move up here. This one was odd. You know, this price behavior right here, rather odd. You know, one thing we were talking about last time in the room was watching this level, about what was it? 147.50, something like that, because that was kind of the level that was going to be the separator here. So we didn't really have a great pick. I didn't really have a great feel for it when we did it in July here, early July. But then once we got to about here in the trading room, that's when we said that, you know what, this one is likely coming back toward 154, 155, because it's likely coming back to the HVN. Even though the market structure had broken down, everything to me seemed like a squeeze might be coming. This was at a point when the market was quite strong as well, when tech was strong, and yet Apple wasn't really participating. Eventually we got a squeeze here. So this one, again, gapping, it's going to take a big gap up if it were to stay here right now, but trading 159s. The market structure, this one just doesn't have right now anything really to like, other than we'll see what happens with this gap and how far. But 140 is still the big key level there, and that's still the level that if this thing were to pull back to there, it could be a great buy. So 140, but you can see right here, longer term, that's kind of the market structure right now. So it's up here in this general zone, just not, and right here we're trading about right there right now. So again, if this thing were to pull back 140 into this zone, that could be a great buy type of opportunity right there. But right now, not really at a zone that's really great for me. And I did have BLDR. Let's take a look at BLDR. BLDR right now, again, you got to be careful selling at resistance when the market generally is going up. But when you see rejections at the edges and you see clear ranges that have kind of played out, you know, you can take some pretty good shots there and actually get in ways that give you great odds, right? So in this case, you can see how the price is rejecting off the previous month's high here. This was an edge where it recently rejected back down. Here's prior support. Price takes out those lows and works back up. So this is a great trading range, right? And in a trading range, as I always say, you want to fade the edges, fade new highs, fade new lows. This is a first day rejection with a sell signal. We haven't had a signal since back here. That signal was back in February. Yep, February 20th, and boom, we saw how big that worked out. Past performance not indicative of future results, obviously, but at the same time, this looks like a great, decent opportunity to watch. So how do we do this? In terms of identifying where price could go if we were to see rejection, you have to go based off of how long do you want to hold the trade? Is it a week? Is it a couple of weeks? I tend to go for the month here and see, you know, obviously weekly targets, but the monthly targets are fantastic for these types of moves. So I'm going to bring up the bear monthly target, and based off of that high up there, this is my ADR target. So the PivotBoss ADR targets, and based off of this rejection high, if we assume that that high is going to remain intact, then this lower red target at 1422 is your average range target for the month. So on an average month over the last 10 months, that's the 10-month average range target. So 100%, whatever the average is, you forecast it down 100% from that high, you get 1422. My primary target is always this one. That's your 75% target. That's 1474. So from that high, this is your target zone, and that gives you pretty good odds, you know, that you could reach that area if you find the right rejection. If you find the zone that looks like, hey, this looks like rejection, we might be headed back. That's your zone right there. So if we're quantifying this thing, rejecting this high, using that pivot high, this would be a great target zone between 1422 and 1474. If this is rejection, now you want to watch this zone right here. If price pulls back to 1603, perhaps as high as the previous high, bears need to be able to defend there. So that's the optimum entry, is watching to see how price opens And if it pulls back into this zone up here, very similar to this, you want to see how bears respond for a defense, because that could provide an opportunity. So again, always got to be careful with this one. Now, one thing I would caution on is you always got to know when your calls are coming up. So I would probably wait on this one until that comes out, and then if everything's still in line, then go ahead and work on that. So just one thing, always got to worry about your earnings, because you don't want to get caught in the wrong idea at the wrong time. All right, that pretty much does it here for today. Thanks everyone for hanging out today for the August monthly market outlook. I will have this up and posted on the website and also tweeted out, so I'll have the recording put out later on this evening. If you have any questions, you can contact me here through PivotBoss.com. You can go to the contact form right there and drop a line right away. You can take a look at what the book has to offer. A lot of fantastic things here. It's only $69, so if you go to pricing, the book is only $69 right now. 314-page book, provides phenomenal training on price-based analysis, market profiling, volume profiling, and pivot-based analysis, in addition to other things. If you haven't tried our premium trading room, it's $99 a month, and you get training with this as well. So 10-part executive training series, a chart gallery, you get proprietary indicators and tools, those types of things. We talk stocks, futures, and are starting to include more option discussion as well. Access is from 8 to 11 a.m. Central Time, so 3 hours every morning. And from there, we're able to do a pretty good job of staying on the right side of the market, depending upon volatility as well, right? Right now in the summertime, as we head deeper into August, got to be careful about the volatility and the lack thereof. And then as we power into the fall, volatility will really pick up and offer some fantastic opportunities. Again, the premium, $99 a month. Thanks, Vicky. And if you also want to check it out, the 10-part executive training series is pretty powerful. Here's the dashboard, as a matter of fact, if you wanted to check it out. So right here, this is our premium dashboard for our premium members who are part of our trading room. Our trading room information, you go down here to analysis, and that's where you have your reports and some calendars. Premium replay is fantastic, where we provide replays of some of the things that have happened in our trading room. Live charts. This training right here is our 10-part executive training series, and from here you can see each of these compartmentalized out, and from there, for example, if I were to click on this, it would pop up part 1 of the training, which is based on auction market theory, which lays the foundation. It's 36 minutes, 37 minutes almost. And from there, each of these are about 30 minutes to 45 minutes long. The longest one, I think, is 55 minutes. But it's designed to give you a very quick understanding of the PivotBoss methodology and how we approach the market, from identifying opportunities to engaging those opportunities and forecasting targets for those opportunities. So that's all there. We also have our signature setup series, which shows additional setups as well that we like to trade, and additional training as well. We also have our resource library, which supports Investor RT, Thinkorswim, NinjaTrader, and OmniTrader. All those are there, in addition to other great tools and indicators. So a lot of great stuff here for our premium members. Check it out. Give me any questions you have using the contact form, and I'd be happy to answer them. But again, thank you all so much for being a part of our monthly market outlook for August 2017. We'll see how these opportunities play out heading into the rest of the month. Everyone have a fantastic rest of your day, and I will see you all soon. Take care, folks.